I don't want to waste your time, so there will not be an intro. Let's get started. In the Fidelity homepage, scroll over to Accounts and Trade, and scroll down to Trade. This will bring up the trade page. Now, we are trading stock, so we're going to select stock. We're going to use our account, whatever account you have, put it in there. This is a dummy account, but there's a little bit of cash in here because I want to show you the difference between non-margin buying and margin buying. And we'll talk about this a little more when we go down to order type. But for now, think of non-margin buying power as the cash you have in your account, whereas margin buying power, typically double non-margin buying power, is the money that you can borrow from the bank plus your own money. So you're borrowing from Fidelity, in other words, if you're using this money. So if you have a margin account, you're going to see this, and basically you can double your leverage. But in most cases, if you're not very confident in your trade, you're going to probably want to use cash. Anyway, that's up to you. That's a risk assessment that you have to make. I'm just going to show you how to put the order in. So once you have got this stuff, which is all the default, by the way, you scroll down to symbol, and that's your first decision. What are you going to buy? Well, let's say we want to buy Zscaler stock. We just shorted Zscaler, but let's say you want to buy the dip. Well, put that in, hit enter. Got to know the ticker, of course. Hit enter, it's going to show you the price. It's going to show you the daily change in terms of dollars and in terms of percentage. And then the important part is right here, the bid and the ask, and to a lesser extent, the volume. Right now, volume is 0 because I'm making this video while the market is not open. The volume is going to tell you how many shares are trading at the moment. And the bid and ask are important because there is going to be some sort of profit loss opportunity or profit making opportunity just between the bid and the ask. And we'll talk about that in a second, but let's understand it first. Bid is the amount of dollars people are willing to pay for the stock at the moment, whereas ask is the amount of dollars people are willing to sell the stock at the moment. Obviously, you want to pay as little as possible for this stock. You can see the price at the moment is $274, but the bid is $260 while the ask is $285. The price is pretty much in the middle of the bid and the ask. Let's keep that in mind as we move down. Our action is going to be buy. And by the way, when you're ready to sell this stock, you can go through this whole process again and just choose sell, with the exception of the order type. And I'll show you that in a minute. Okay. We are buying. How many do we want? Let's say we want 1,000. Obviously, this quantity is going to be decided by how much of your portfolio you want to dedicate to buying the stock. You can buy as little as 1 share. You always want to check whether you have the cash to do it. This account obviously doesn't even have the cash to buy a single share. Then you're going to select your order type. Now here we have a lot of choices, but I'm going to tell you stick with these two, market and limit, because they're simple. And you usually, at least in my experience, don't really need anything besides a limit order and a market order, unless you're doing something rather complicated. You have a rather intricate thesis on how the stock's going to move. But for us, we're just going to buy the stock. We're going to go with market. And it's a bad decision, but I'm going to show you just as an example. Once you select that market right there, your order type, it's going to tell you how much you can expect to pay for this transaction. And all brokerages, all big brokerages now have 0 commission, so you're not paying the brokerage anything. The brokerage makes money by having your cash in the account, so they actually trade or they invest with your money. That's how they're getting paid. For you, you can just ignore that commission and look at this dollar right here, this dollar value. That's what you can expect to pay. Now, why is it this? Well, we're assuming that the market price is this, but that's actually wrong. I think Fidelity does this incorrectly. You are going to find that if you actually go through this with this order, if this was the circumstance, the bid and ask were the circumstances at the time of the purchase while the market's open, you would actually be paying $285,000, not $274,000. So that's a extra $10,000 that you just threw away because you went with a market order. In other words, the market order forces you to pay what the stockholders are asking for the stock per share. And we don't want to do that, generally, especially for something like Zscaler where the spread is wide and the price is high. If we're talking about something, let's see, the SPY, it's not a stock, but it acts like a stock. If you look at the SPY, you see how this bid and ask spread is basically only 4 pennies different. In that case, I usually would just go with a market order because I want my order filled quickly because I do more day trading and I care about those little pennies, you know, that you will lose out on or gain by making the trade at the right technical time. But in general, you get these little differences between well-traded stocks with high volumes. You don't get them when you look at less popular stocks. You can see the bid and ask already changed here. Market's close to opening, so it looks like the people who are holding ZS are moving their prices down. In any case, what we want to do is avoid having to pay the ask price, and we're going to do that by switching to a limit order. Once you press limit on this drop-down menu, you are going to see limit price pop up. And you are also going to see one thing down here pop up, which is the condition. So let's talk about those in a minute, actually. Let's go with market order. Let's talk about these two first, because if you're going with market order, if you're playing the SPY or Apple, you're probably going to go with the market order, so you don't need to know all that extra stuff. Let's just get this stuff done. Okay. Time in force. Day means you are okay with this order being filled all day, at any time, or on the open, or on the close. You want to buy it at the bell, or at the closing bell. That depends on you. Generally, if you're making a market order, it's because the bid and ask are tight, there's a lot of volume, and you know that your order is going to be filled pretty much right away, so you just go with day. Doesn't matter. Just go with day and you're going to get it filled pretty much right away. Trade type, that's up to you. You want to use margin, you want to borrow money from Fidelity, or do you want to just use your cash? Now that we've filled everything out, we are ready to preview order. It'll just give you, it's going to tell me I can't because I don't have the money. But it's going to pop up and just say, you sure? And you click yes. There's no more decisions to be made after preview order is clicked. All right, now let us discuss limits. Order type limit. We are putting this in because we don't want to pay the ask price when we see that there is a $5 spread between the bid and the ask. So what do? Well, ideally we'd like to pay the limit or the bid price, which is $271.88, but I'll tell you 71.88, but I'll tell you you're not going to get that filled. You're never going to get that filled because this one isn't filled. If this one were filled, then this wouldn't be the bid price. The bid price would be higher. So what you're going to do instead is what I usually do, which is go up in small increments. So I'd start maybe there. That's pretty far from the midpoint, but I don't mind. What I'm going to do is I'm going to put in a limit price that's a bit above the bid. I'm going to stick with day and cash. Conditions, all or none. This is the second decision you need to make. Are you able to accept a partial order fill? In other words, we are looking to buy 1,000 shares of this stock. Are you okay if there's a seller who's willing to sell you at this price, but only of a quantity 500? If so, no conditions. If not, and you really need to get this 1,000 share order filled, you got to go with all or none. Generally, I go with none if I'm doing a limit order because I'll just slowly move up this limit price until I get everything I want. And it might be a couple orders, but I got that stock at a cheaper price than I would have if I had just bought it outright. So let's review this real quickly. What I like to do for the limit price, start a bit above the bid, enter that order. If it doesn't get filled, cancel it, come back, go a bit higher. Keep doing that, and usually as you approach the midpoint, you will get your orders filled, and you'll save money doing that. Now you could just go ahead and put in the midpoint, and you'll probably get your orders filled. You might have to go a bit higher. It depends on the situation, it depends on the stock, it depends on the volume. But in general, the way I do it saves me a lot of money, and I'm sure it'll save you a lot of money too if you're playing anything with a wide spread. If you're not playing wide spreads, you're playing something like Apple. That's a pretty tight spread, 4 pennies. Well, 4 pennies, unless you're buying a huge quantity, 4 pennies shouldn't matter that much. You're buying, 10,000 shares. Yeah, I'd still do the limit method. Move the price, start with 148.80 cents and start moving that up by a penny each time. But if you're just buying like a share, 9 shares, not a big deal. I'd just go with a market order. That's what you'd expect to pay. Okay, so I think that about covers it. I'm just going to go run through it one more time, just in case you're following along and you want to double check. Head to trade, check everything up here, make sure you're trading with the right account. Enter the symbol, Apple. Apple's a tight boy. You can see he's tight because the bid and the ask have only 8 penny difference, and we have a high volume. So we're going to buy whatever we wanted to with a market order. We're going to buy it, let's say, this time because we're waiting for the market to open. We want to buy it at the open. Let's say we have a trading strategy. I have these trading strategies that show probability of whether a stock is going to end the day up or down based on whether it opens up or down. So let's say I'm going to use that strategy. I found maybe Apple, if it opens up, then almost all the time it goes higher. So I'm just going to say on the open, cash, and boom, we're done. If you're doing it while the market is currently open, go day, cash, preview order, make sure it gets filled. If it gets filled, you can go back to your account and you'll see you got that stock minus, and your cash value, your cash has been paid out. So that is pretty much it. If you have any questions, be sure to leave them in the comment section below and I will get to them. And if you have any video requests, I'm very happy to do them. I'm trying to get back to 10,000 subscribers. I was above 10,000 subscribers, but I kind of dropped off in the YouTube game. So I would really appreciate it if you guys can give me a subscribe. I'd really like to get back above 10K ASAP. Thanks a lot for watching, and, well, happy trading.